Hey, welcome everybody to the closing beat. Happy Tuesday. Always forget the days, man. Hope you're having a great day here. This is just a quick show that we do. We're financial advisors here with Jazz Wealth Managers, and we cover the stock market. So we go through all the good, the bad, and the ugly for you. Try to help you out, learn a little bit along the way if we can, and help you, learn. That's what we do here. We're all about stats, so we go by the historical stats for anything that we can rather than give you opinion. It's fun to have an opinion, but of course, when we're making major decisions, of course, we want to give you the right advice there. So if you look at the stock markets today, we got a little bit of a rally. We're going to cover those stats because yesterday we kind of walked you through what to expect for today. Again, not from an opinion standpoint, but from a historical standpoint, what to expect. I'll cover that for you. This is still officially the worst start to May in just about 50 years, even after today's recovery here. That's because yesterday was so horrible. So we'll cover that as well. May through October, by the way, is the roughest 6-month stretch for the stock market. So if you're just tuning in for the first time, trying to learn the stock markets, how everything works, well, know that you have a rough 6 months to go through, and there's nothing wrong with that. Today, the stock market's rallied. You got 200 points on the Dow, 22 on the S&P, 87 on the Nasdaq, basically around a 1% gain on the markets, a little bit less than that because at the end of the day, the market sold off. That's not a good sign, by the way. President Trump came out today, basically helped sort of calm our concerns, saying that the trade talks with China and, of course, the U.S. Have not collapsed, right? They're still working on it. It's just that in the meantime, they didn't live up to their end of the deal, and so they're placing tariffs as kind of planned, right? China did hit back yesterday with their retaliatory tariffs. However, a bit of a joke if you look to see the sort of things that they put tariffs on. They've got some strategy going on over there. They're going to end up having to pump money into their economy so that they can justify higher tariffs to continue to fight back. If they start pumping more money into their economy and you start seeing that news, of course, I'll point it out to you. But that would be the first hint that they're about to really hit us with some tariffs. But so far, not too big of a deal there. For our customers, go back and watch our last portfolio update. We actually walked you through the day-by-day historical performance of the markets in May, so you could see. If you haven't had a chance to check it out, I'm going to include it in this month's portfolio update as well. This week, by the way, if you haven't watched us here in the last couple of days, this week is historically the worst week of the year. So if you go back and take a look at this week for the S&P 500, just keep looking back year after year after year. If you go back now almost 10 years, 12 years to be exact, you find that the S&P struggles in this week. So that's okay. Yesterday, we covered some stats. The markets fell over 2%. It was a scary day. And we said, you know what? If you look over the last 10 years, the market falls 2% on that Monday, has the kind of nasty day that it had yesterday. 80% of the time, it bounces on Tuesday. 11 out of 15 times, it actually is positive on the next day by an average of 1%. We basically did that today, right? A little below average. And I think the below average part is a hint that the market's giving you there, by the way. Just also for reference, we went back 25 years, looked up the same stats, and we found basically the same exact thing happens. The Tuesday following a Monday decline of 2% or more tends to be quite positive. If you look through the rest of the week is expected to be positive too, with an average gain of 3.2%, if that helps you. That was the good news. Are you ready for the bad news? If you look on the bottom right-hand corner of your screen, you'll see a chart. And the chart is showing you every 5 minutes what the markets do. And it was just higher and higher and higher all day. No real selling pressure until later in the day. You could see it started to roll over a little bit. That would normally not be such a big deal if it was like a celebratory kind of a rally on the day. Today was not a celebratory rally. It's a recovery rally, which just means the market sold off a little aggressively to one side and has just recovered a little bit on the way up. Now, the interesting thing is if you look at that blue line off to the left side of that chart, volume below average. That's a problem. So the market's volume was a little bit light today, and we saw some selling pressure. That lets you know that not everybody was convinced that we found a bottom. So if we go over to the charts here, we've been really hinting at the 2,800 area. You could also say 280 if you use the SPY. 280 is a major support area, but I don't think today gave you the confidence that you can expect that to be a support area. What I mean by that is if we zoom out and just draw a line, there's a little hidden button here if you're playing along with us in the dojo. All of these charts available to our customers, by the way. If you take a look at the... Oh, come on. hit it. It's a little crooked, but you get the point. If you take a look at this support area, remember, this was a big deal last year. We kept talking about how it was bumping its head, bumping its head, bumping its head, giving you the hint that it couldn't get over it. We came and kind of broke through it earlier in the year there, but now people will use that as support. So in the meantime, you go, yes, perfect, right? Last week, I started saying 2,800. That's where the market wants to pull back to. At least it felt like it. Now that it's done it, you want to see an immediate reversal. You want to see it act like a rubber band. The markets pull back and then rocket ship higher. I don't think we got that today. I just don't think that's enough. What happened today was sort of a weak attempt at a rally, in my opinion. That's the bad news. That's one of the pieces of bad news. The other bad news is you can tell if the markets are ready to rebound by simply looking at volatility. If you look at the VIX, which is also up on the top part of your screen on the right-hand side, the VIX did give back some of yesterday's gains, but not in that sharp reversal way that it usually does. So we didn't see that today, and there's just these little things that stick out market-wise that make you go, I don't know. I just don't know if that's going to be good enough for the markets. But in the meantime, we've got our rallies here. You got the Nasdaq, of course, positive on the day. It did sell off a little bit towards the end of the day as well. The Dow today a little bit higher. We'll cover some of that. The gainers in the Dow still above the 200-day moving average. So for the moment, we all can go to bed with like, all right, that was sort of okay, right? After hours, we're up a couple ticks here, not a big deal. Sector-wise, semiconductors were your biggest gainer on the day. You know why? It's because they've been the biggest seller to the downside. So this is not some kind of a hint that everybody's now funneling money back into semiconductors. This is your short-term traders going, all right, you got a SMH that's fallen 10%. If you go back and you look at the SMH, how many times has it fallen 10%? And then that 10% pullback was used as support. It is a high odds trade, and so people like to look at that. Tesla is another one. When Tesla falls 10%, there's a lot of strategies there that have been very successful in this current bull market. So it's just short-term buying. It's just the short-term traders that go in there and play. Nonetheless, this we talked about yesterday being in correction territory. Well, we've peeked our heads just out of that a little bit. So semiconductors trying to work their way through that, and the better performer on the day. I wanted to point out oil. We could look at a couple other things, but I wanted to point out oil. A little bit of a recovery rally today. However, it doesn't give you any new information. We've been moving sideways here now going on 2 weeks. We have no new information, and I want you to think about investors. You look at the price of oil. Are you willing to bet on it going higher or lower? Well, if you look over the last 2 weeks, you go, I don't know, maybe with a slight higher bias only because we're in an uptrend here and it's taken a bit of a break. However, because of the last 2 weeks, you go, I'm just not sure that I want to make that bet. Sure feels like a little weakness there. And so if you have that feeling, you know that everybody has that feeling, and that's why oil is sort of just chopping around here, giving you that Christmas tree type look. Financials, I think, are important to point out here. Still holding the 50-day. They are the more... You could say financials are more of the relative strength sector of this most recent pullback in the markets. Hasn't pulled back as much. It wasn't as violent. It didn't have as sort of severe drop pullback days like the markets have had. So I give this one extra point. Today it did sell off there going into the close, but technical traders, you got to notice that what sectors here are showing the relative strength that are not normal inverse sectors like utilities and things like that. I think industrials did well today, a good percent gain on the day there. Still struggling here in the short term, but not bad. If you take a look at the industrials compared to some of the other sectors, still above its 200-day moving average, still hanging in there. You can't say that for a lot of sectors out there. They have moved below the 200-day. So that's really sector-wise what I wanted to cover. If you're in the dojo, I put back all the symbols, by the way, yesterday. I had taken them out so we did a class for our customers last Thursday, but I've since put back in a lot of the different sectors that you guys like to look at. Me too. Stock-wise, 10-cent music. This is a new IPO. It's the Chinese iTunes. I shouldn't use like Pandora or Spotify, but it's that sort of equivalent. They reported earnings today. They actually missed on, they beat on earnings, but they missed on revenue. That was the big focus. But they said, don't worry. It's all good, right? Because we're able to charge more now for our service. So that's going to improve our bottom line. Investors were like, yeah, but it hasn't, right? It's going to maybe. You think it's going to, but it hasn't so far. So investors pushing that one a little bit lower, down 6%. That's a Chinese-based stock, by the way. Walmart in the news today, not really like a big gainer or anything. And I think part of the reason is the way the headline is portrayed, like the press release by them, made it seem like it was a national thing. Very clever the way they did that. They're offering free next day shipping without being a member to any service. Like Amazon Prime, you can get the next day shipping, but you got to be a member. Walmart said, hey, you don't have to be a part of our service. But in reality, when you dig all the way down to the bottom, you go, wow, it's on 220,000 products in only parts of California, parts of Nevada, actually I think only Las Vegas, and parts of Arizona, and I believe it's only Phoenix, actually. So it's really just this small little test area, and I think that's why investors were like, okay, yeah, we see you're making progress, but Amazon's still eating you for lunch. Walmart, and interestingly, Walmart is working on same-day service. What they're hoping to do with this, by the way, if you pay attention to this sort of war that's going on in this space, what they're hoping to do is take these 200,000 products. They're all sort of in the same warehouse. So if you're willing to order one and you order another one, we can get you both of those in the same day. Because of that, Walmart has said, we can actually send you that product cheaper next day than we can today. Because if those products are in the same place, you can do that. Remember, Walmart has acquired a lot of AI-based retail shipping algorithm type things. And so what they're trying to do is get all of the stuff in one warehouse, so then they could say the probability of somebody ordering this and this are much higher or whatever. I don't pretend to understand that stuff. But the point is, they now know if you're going to order things that are going to be in the same place, they can offer you same day shipping. So they're hoping to really refine that. And pretty soon you'll be ordering stuff from Walmart and it'll just be showing up the same day. I think that's pretty interesting. In the news also, T-Mobile and Sprint, this is more of a report. I think this came out of Reuters. This is more of a report, nothing official, that they're considering concessions to the Justice Department so that they will get the deal approved. They're trying to merge with each other, $27 billion merger. They're thinking, hey, what if we get rid of our prepaid cell phone service as a concession? That's sort of like you are married to your wife for 20 years, and let's say it doesn't work out. You guys are going to get a divorce, and you go, okay, we'll go ahead and split. But tell you what, you can have the remote to the TV. Does that make you happy? That's kind of like what they're telling the Justice Department. We'd like to get together here. It's a reverse. We want to get together, and if you don't agree with this, we'll give you the prepaid cell phone service. That's a throwaway product. I mean, they don't care. So essentially, they're trying to hint at the Justice Department, and the Justice Department knows, but they're trying to see what's the least we can get rid of, and have the Justice Department say, okay, we could do that. That's a deal. Anyways, so that's that one. If you take a look back at the charts here, you got Microsoft and Cisco in the news today. Microsoft higher by 1%. Cisco, I think 1.25%. These were, so Cisco, Bank of America said, you know what? This is one of the best stocks you can own if the trade war persists, because it's in the services side, less on the hardware side. We've been pointing out how Goldman Sachs has been telling their customers, if you have to be in tech, you want to be in service tech, and service tech means things like Microsoft and Workday and things like that. And so that sort of theme is continuing, where now everybody on Wall Street is starting to go, well, wait a minute, yeah, that makes sense. We don't want Apple, we want the service companies, or you want a smaller allocation to Apple and more into these sort of software as a service companies. So we've been touching on that. I won't stick around too much on that comment. Ralph Lauren, these guys are retailers. They actually beat on earnings by 17 cents. It was a good beat, by the way, earnings-wise. They beat on revenue. However, sales rapidly slowing here in the U.S., and that's not a good sign because they get a bulk of their business here from the States. Do you like pot stocks? Do you? Tilray was higher after hours. They missed on earnings. However, they lose money. So as long as they lose about the same or somewhere close to what they lost, nobody seems to care. Revenue beat by $3 million. So bringing in a lot more money there because they sold twice as much. This is a tough one. So it appears that the pot companies, what we're focused on is kilograms. How many kilograms did they sell? They sold twice as much, 3,000 kilograms sold in the last quarter, which was 2 times more than expected. So Tilray getting a little bump there. Lots of little things there. So what Wall Street's doing there is they're trying to figure out what is it that we really want to focus on, right? Netflix, we know, I've used that as my example. We want to focus on subscriber growth or loss, whatever it may be. Every company has something that we want to focus on, some sort of metric, whether it's like Etsy. So for example, on Etsy, how many products were sold? What was the margin between what product was sold and what it was initially sold for? Things like that. With Tilray and these pot companies, yeah, we get it that it's a quantity issue, but there's so much more that they're working on. But anyways, Tilray off its lows. And I believe, whoa.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund
that was
manager.
higher today by about
Our private classes will teach you.
Yeah, I believe they are. I think they got earnings coming up as well, but that had a pretty good day. I didn't check into the news on that one. That's something you're interested in. And I think that's about all I got for you there. Yep. Let's see here. Let me make sure I did get everything because I wanted to cover. I did. Okay. Yeah. Any thoughts on Berkshire? Yeah, one of the weaker areas in the financials today. Berkshire Hathaway kind of stood out as a little bit weak. Financials for the most part did well, and Berkshire Hathaway just had one of those days where broke through the last 3 days worth of support there. So not good in the short term there. Okay, I won't say that one. So is your 457 safe for today? I would say for today, the markets seem stable, but we don't do a day by day, right, with your retirement. So it's not something, you're not going to do anything different about it. I do have concerns about how we finish today. So I'm not sold, and I think a lot of the technical traders that would be spending their short-term active investments either long or short, they'll be okay with either side. I don't think they are going to be convinced that it's all clear to buy to the upside there. Yep. JD, the pure China play there, had a good day as well. That was earnings, I believe, from JD. Alibaba comes up tomorrow. That's going to be a big focus because everybody's trying to get a measure of the Chinese markets from something that we're supposed to be able to trust. And Alibaba is just a pure China play. So we'll see how that goes. We're expecting $6.57 worth of earnings. That'll be out before the market opens tomorrow. So we'll see. We'll see. Insulated from the trade war. I'm not sure what you mean by that. Insulated from the trade war. I've never heard of that pot stock there. I'm not sure if I can even pull that one up. Is that a penny stock? I don't follow the penny stocks, but let's see. Nah, that must be a penny stock of some kind. Don't follow the little guys. Sorry. Yeah. Is there a major difference between Google and Google? Yeah, they're two different classes of shares. It depends on how you want to participate in the stock. It's Alphabet and, do they just call the other one Alphabet? Same thing, just two different classes of stock. It's unfortunately becoming more and more popular. It makes it a bit of a mess. You could also say the same thing for Under Armour and Under Armour A shares. That's just the first one that comes to mind. It's a mess. Either way, if you're going to participate in a long-term or short-term way, for the most part, it doesn't really affect you guys. If you're going to be one of those hands-on kind of people, you may like the different class. It's up to you. I haven't run into anybody that wants to mess with that. Trump said it's going to be a few weeks on the China decision. I think it's going to be a few weeks further than that, right? Like weeks is probably not the term to use. The reason he says that is because he's going to go meet with President Xi. You know he's going to use that as a, yes, America, we're taking care of everything, we're beating them down, but they're still talking about it sort of thing. So we'll see. That's the G20 meeting coming up. And that basically allows for the next couple of weeks, provided that there are no comments, tweets, or anything like that, it allows for the markets to sort of say, is the 2,800 level currently where we want to price the market given the 25% tariffs? You look at what was said about Apple today. JP Morgan came out and said they're going to have to raise prices by 4 or 14%, something like that. Basically, they were telling Apple, your profit margins aren't good enough. Apple's got like 37 or 38% profit margins, and they're already sort of under pressure for that. So we'll see. Not sure where I was headed with that discussion, but we'll see. That's what happens when the day gets old. No real comments on Zillow. There's a whole transition going on at Zillow right now. I hear that they were successful in actually flipping like 80-something houses. From their earnings announcement, that's interesting, right? Where they bought the house from one person and sold it to someone that was looking on the site. That's interesting. There's a little disruptor there that you could get excited about, but Small potatoes right now, so they're still working on that. Not the company, but that division. Yep. They lost 100,000 per flip as part. So this goes into that same argument. I was reading that. They lose the money, but it doesn't matter. It's like Uber. We're losing a couple billion, but who cares, right? It's been 9 years, right? Like, okay, that's interesting, but if Zillow can turn it around like faster than that, right? If they go into this for like a year and a half, 2 years, and they find a way to squeak out even a small margin on that, that to me is huge. So I think they get a little credit in the short term for at least trying this thing out. If it's a major failure, it's not a big part of their business anyways. Sort of cost of marketing, they'll just charge it off and it'll be done. But it's interesting, that process. Like, could you imagine? I'm of an age where there was no internet one day, and then there was internet, and we were all talking to each other online instead of in person. So the fact that there could be this transaction, holy cow, I think that is so cool. Yep. That is so cool what they do there. I wish them well, right? It certainly gives companies like Redfin a bit of a run for their money. Maybe in the longer term. Redfin's a new IPO, so we'll see. But I just thought that was cool. All right, let me wrap it up here. You got Alibaba with earnings tomorrow, Macy's, Children's Place, Cisco, of course. Isn't that interesting? They were in the news today. Virtu Financial, I think that's one of the most interesting companies on the planet, not from an investment perspective, but just by what they do. Also, some stocks that we own that are paying out dividends, or it's ex-dividend date, by the way. I just like to point it out because it's like, hey, we're getting paid for owning stocks. Microsoft, 46 cents, Xilinx, 37 cents. We don't own Cheesecake Factory, but if you happen to, they're paying 33 cents. Zion Bank, 30 cents. We don't own that one at the moment. Have in the past there. And Ozark Bank, 27 cents. So if you happen to own those stocks, congratulations. You're getting paid a few pennies on those per share. Yep, that's all I have for you. I hope you enjoy the rest of your day. Thanks for the kind words there, enjoying the market review. If it helped you in some way, maybe hit the subscribe button. We'll be back all again tomorrow to do this all over again. And enjoy the rest of your day. See you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.